And I will give it over to Victor von Wächter, who will host the panel named DeFi-ning DeFi Challenges and Pathway.
Yeah, thank you, Marcel. I hope you all can hear me. And also from my side, welcome everyone. After the interesting previous presentations, I am happy to even proceed further with discussions about decentralized finance. We just heard about the incredible rise and we saw a lot of numbers, and I also have some numbers. We heard about the incredible rise and approaches of bringing DeFi closer to traditional financial services. So in this panel, we want to continue and we want to discuss which challenges DeFi has to overcome in order to grow and institutionalize in 2021 and beyond. My name is Victor von Wächter. I'm going to moderate us today. I am a PhD researcher for financial systemic risks in DeFi at the University of Copenhagen. And as one of the key topics here on the conference, the explosive growth of DeFi has been or is one of the most intriguing topics in 2021. The rapid growth comes consequently with a lot of friction, in particular, a lot of friction for institutionals and institutions in financial services. So to discuss this, we have a pretty stellar panel here, which will help us to guide us through. For all who missed the previous presentations, I would ask our esteemed panelists for a short, brief self-introduction, starting with Annika Patz from Evershed Sutherland, then Wolfgang Albrecht from Staking Facilities, Leo Lamesh from GK8, Philip Pieper from Swarm Markets, and last but not least, Ashit Tripathi from Aave.
Yeah, thanks, Victor. Hi, everyone. I hope everybody can hear me. So happy to be at the Crypto Assets Conference. My name is Annika Patz. I'm from Evershed Sutherland. I'm a lawyer there, and we're working in the banking team in Berlin and Hamburg, and also internationally with our Hong Kong and US team. We're doing everything in crypto, banking, finance related, so helping people out, getting a license in Germany, especially, or in the US for crypto asset services. And of course, we're down to the DeFi phase where people are coming to us and asking if they potentially do need a license to operate a DeFi protocol. Previously, I worked for the Börse Stuttgart Advice Exchange, BDEX, in Oslo, and also for that for Solaris Bank, digital assets, so more for the cryptocurrency side as well.
Wolfgang, you have to unmute.
Classic. Sorry, guys. Yeah, I'm Wolfgang, a co-founder of Staking Facilities. We are a staking as a service company, so we operate staking infrastructure for various major proof-of-stake networks. We've also been actively investing in the space, so we're an independent self-sustaining company, and in this ecosystem since the very early days, doing this and that, and staking and DeFi is certainly where our current focus is.
Hi everyone, my name is Leo Lamesh. I'm co-founder and CEO at GK8. My background is cybersecurity at the level of national security. I used to work for the Israeli Prime Minister's office. I was part of an elite team that protected the strategic assets of the country from cybersecurity attacks. At GK8, we started our journey 3 years ago when we hacked one of the most popular cold wallet solution in 4 days. And the reason we could do that is because it was not a real cold wallet, since it received input from the internet at some point. So at GK8, we created the first true cold vault that can create, sign, and send blockchain transactions without the need to receive input from the internet. Our technology combined with MPC for automatic transactions, along with this cold vault, which is literally beyond the reach of hackers. We are partnering with banks and financial institutions, providing them with a self-managed solution so they can offer services including custody, DeFi, staking, and tokenization. Our clients are managing billions of dollars value of cryptocurrencies in digital assets, including eToro, Prosegur, and more. And I'm very excited to be here today.
Hello, my name is Philip Piper. I'm the co-founder of Swarm Markets, which we just launched as a licensed DeFi protocol. Been in the space since 2016. And in my former life at financial institutions such as Deutsche Bank and DB Capital Partners, which is from and Allianz Group, and a serial entrepreneur. Ajit, over to you.
And last but not least, Ajit,
Yeah.
do you want? Yes.
Well, thank you for inviting us to this conference. So I lead the institutional growth for Aave, which is one of the world's best known DeFi protocols with over 21 billion in liquidity today. Aave was started by Stani Kolacho and Jordan 4 years ago. So when DeFi was still very, very early, and today, we are a software company. We build technology to enable decentralized market infrastructure, such as Aave for clearing. Essentially, it's for liquidity, providing liquidity to the rest of DeFi, and ITO for essentially allowing creators to use their NFTs and sort of earn income streams and royalties from their NFTs without having to sell them.
Yeah, thank you, Ajit. I think we have a pretty stellar, multifaceted team, a lot of regulatory knowledge, a lot of security/infrastructure knowledge, and one of the largest and most known DeFi protocols with Aave. So without a further ado, I also took a look this morning at the data. We are currently in DeFi at $65 billion under management, and 1.75 million addresses are using DeFi. And I think we can say like across the world, like every country in the world. Both numbers, asset under management and addresses, are growing triple digit over the year. So how would every one of you assess the current level of adoption of DeFi? Like who is using it? And what do we need to mature further this ecosystem?
Who's this question for?
It's open, like everyone can take it.
Yeah. So, I'll start. So, now we have, DeFi has over 2.5 million distinct Ethereum addresses using different DeFi protocols. In case of Aave, I think through direct or indirect usage, we can say that about 25% of those addresses are using Aave and we have at least 50,000 monthly active users on V2, which is on the mainnet, and similar on Polygon already, which is barely a month old. So DeFi adoption, in the beginning was just developers, beginning of last year, and primarily, crypto natives. Then came in crypto whales. Then I think a lot of mainstream users started to come in, which included typically proprietary money, family offices, crypto lenders, crypto native asset managers, crypto corporate treasuries, and so on. Now I think we're starting to see many mainstream users as crypto's adoption has grown. Just about everyone is coming into DeFi, and which includes hedge funds, right? Hedge funds are taking a lot of interest in DeFi. And especially with side chains like Polygon and layer 2 solutions like Arbitrum coming online, I think we'll be able to scale DeFi to practically everyone in the world at some point.
I would jump in on the traditional financial institution side. Back in time, we saw that banks that interested in entering the space was mainly looking to offer only crypto custody. But as the market is evolving and the DeFi demand is growing, they also have a need to have the sufficient infrastructure also to provide the DeFi services. So that's where we meet at RFIs and RFPs. Such questions are already been asked, and the need to manage the private keys in a way that has support for smart contracts, including DeFi, has a lot of growing demand.
Yeah, I would add one aspect. I think the economic environment is obviously driving a lot of the crypto growth, but also just the money markets as they stand. If you're in a negative interest environment, there is a desire to do something that actually gives you some kind of yield. and do that in a way that you're trusting what happens. So DeFi is compelling from that aspect because it obviously has a transparency around it, and it's built for that fact of holding yet doing something with that capital. So whether you're a retail investor or someone who's actually sort of potentially sort of just adjacent to the capital markets, maybe even institutional, that is a compelling story to want to engage in. Doesn't mean that we're there yet. I think we're still in the early innings of usability. We're still forcing people to know what MetaMask and a wallet is. We're still forcing them to understand what the cascade of different smart contracts mean and what they sort of how to interact with them. But as we saw the pace in the last 12 months unfold, I mean, that's going to look very different in 3-4 months time and already. And there's a lot of efforts that are going to make that a lot more usable and adoptable by normals.
Yeah, I couldn't agree more with Philip. I think we're still at an early stage if we look at the retail and investors, and maybe also at bigger institutional. So what I hear, they're more of looking into the space, trying to understand it. I think there's a lot of education people need to do, but I also see the rapid growth this year. This is crazy. But still, I really liked what Connor Payne said at the beginning of our discussion earlier today, that the interesting thing is the DeFi and not the finance part. So maybe I really hope that we're going to see some really cool products, not just not only for arbitrage, but
All right, maybe adding to this, I think one powerful weapon the DeFi has at its hand is, as I mentioned in my presentation, the liquidity mining incentives. So I think this is, as a concept, I think brilliant. And I think if we perfect that skill, it can help us really open the floodgates way more than they currently are. I think Uber in the early days, they tried to give out equity to drivers when they kind of joined a new city and tried to build up a force of drivers. And they wanted to give out equity to those drivers. I think they weren't allowed to do so, but I think the concept behind it was the same, and support this capital formation and kind of bring in liquidity and make it sticky. This is kind of something I think DeFi can really excel on. And I think it will be a powerful weapon to further pull in capital. And once it's there, I think it's not going away anymore.
Yeah, I think so. We all certainly agree that the trajectory will even grow further. But there are always two challenges or main challenges mentioned with respect to further institutionalization or further maturing of DeFi. And I want to dive in each of those. One is often mentioned is regulation, and it's a big topic, so we have to focus a little bit on it. And the other one is also always mentioned is this super complex blockchain technology introduces the notion of decentralization, while you still need IT security or security. So these two challenges are always heavily discussed. Let's start with the regulatory one, because we have pretty deep experts here, and also Aave is even flirting, if you actually allow me to say this, Aave is even flirting already a lot with European regulators. So one question is here, how can these increasingly exotic transactions or exotic financial products, which DeFi allows, it's more than just Bitcoin, how can this be regulated from an anti-money laundering perspective, from a cash flow perspective?
So, I mean, first of all, we're not flirting. We are very actively engaged with regulators. I mean, the FATF, the OECD, the FCA, you name it. It's our role to engage with regulators and demonstrate that there is a better way of building market infrastructure which promotes transparency and automation. So the way to think about DeFi is that we are where Netflix was in 1998, and they were talking about streaming back in 98, 99, and and at that point they looked like they were shipping DVDs. But look at 2010, and 2010 onwards, everyone has been streaming everything. And now Netflix and video streaming is the primary way to deliver content. Now, when you think about where the principles and objectives of regulation, then the principles and objectives are not met by current infrastructure, right? So there is a perception that somehow current market participants can be trusted, and we have seen enough, I think, with Archegos. And so it looks like things are not risky, and suddenly we have LTCM, we have Archegos, we have the global financial crisis. So this whole infrastructure of paper-based regulation, which is kind of implemented by auditors, lawyers, and with, if you will forgive me, priests, doesn't work, right? It simply doesn't work. So I think there has to be a better way, and I think even regulators recognize that every time some rules break, they create new rules to fix the previously broken rules, and that model hasn't worked. It hasn't worked in the conduct space, and it hasn't worked in the prudential space of regulation. So I think the question, so where regulators like Hester Peirce and Brian Brooks formerly and others have been aligned on, is that what DeFi is trying to achieve is clearly in the right direction. Now, obviously, it's a little bit early in terms of technology. There is a lot to be done on privacy, security. There's a lot to be done in scaling. There's a lot to be done in terms of creating controls and a firm legal basis for decentralized organizations. So there are some open challenges, but I think the direction of the internet is what it is, and at the end of the day, I think it's we all love to speak about risk every time we have to deal with something new. But maybe it's better to think about the opportunity. And, so at some point, I think regulators have to create a do no harm policy towards this new Web3 infrastructure that's being created, which is what Bill Clinton and Al Gore did in 1997. And, and the economies that figure that out and take the opportunity will do well, and others will be left behind. So it's up to Europe. Historically, we've had a slightly extreme risk aversion towards new technology, but I think, and that's not helped the economy of the whole continent. So hopefully this time we can take a more proactive approach in promoting innovation in this space.
Yeah, I think it was incredibly essential to get like a framework in which the industry can start thinking. And I think that was sort of introduced, in different legislations in 2018, 2019, it had developed further. And I think, the last place I expected that it would take the shape and form was effectively sort of Germany with the amendment of the Banking Act, which we then actually latched onto and drove through at this point in time. But it's incredible to see how in the personal interactions that I have with regulators, that there is this notion of there is an opportunity here, an opportunity to also enforce financial market regulation in a much higher transparency than potentially in the financial markets. And that once the switch flips, there's an incredible amount of dynamic that then happens on the regulator side, where then there's resources being invested, there's learnings that these resources go through, and it takes effect. So I'm kind of optimistic that we're heading towards actually a very compatible, like a regulatory innovation, a regulatory sort of ecosystem that doesn't kill innovation, that actually is versatile enough to deal with the different challenges of different asset classes. And still isn't burdensome because it's automated, right? So I think we're heading in the right direction.
I would just get back to the centralization issue, if it makes sense. So although the DeFi is supposed to be fully decentralized, eventually it's based on a smart contract, right? And the way the smart contract works is that there is an owner that uploaded the smart contract. And we should be noted that most of the smart contract keeping to themselves that the owner has some superpowers, such as capabilities to make a freezing, minting, burning capabilities. So it's super important that the private keys, in order to hold and execute these superpowers, should remain secure. If hacker will possess these private keys, he can just control the full assets and just destroy the full DeFi economy. At GK8, we provide the cold vault where this private key can be stored. And while we have the support for this smart contract functionality,
I have to interrupt you.
This can be supported.
I'm very sorry. The time's up. It went so flying fast. We'll have the intermission now. I'll have to thank all of you again. Thanks to you, Victor. Thanks to all of the panelists. And if you're interested in more on the topic, there is a paper, an article with exactly the same title as the panel discussion, DeFi-ning DeFi, Challenges and Pathway, which I co-authored, by the way. Again, thank you very much, Victor.
Thank you.
I'm sure we'll see each other and hear from each other. And now we'll have a short intermission until 15:40.